Hi, hello and welcome to Journey Towards Wealth. In today's video, let's discuss about a very interesting topic of what differentiates the HNIs of India from the middle class of India. What does it take for the middle class of India to catch up with the HNIs? I have a very interesting table for your reference. Let's go through this table before we talk further on this. As per Horan India Wealth Report of 2020, Indian middle class and above has been categorized into 8, starting with the Indian middle class with an average annual income of 2,50,000 and a net worth of less than 7 crores. There is a new category identified as the new middle class where the average annual savings is around 20 lakhs. Then comes the affluent category with a USD 1 million saved and invested equivalent to 7 crores based on a conversion of 1 USD is equal to 70 rupees as on 2020. The above categories HNI, UHNI, International UHNI, Huron Rich Listers and Billionaires forms the cream of India with less than 1% of Indian population in this category. It is important to note the asset accumulation patterns of the HNI and middle class or the new middle class to understand where there is a gap in the asset they have been investing in. Let's have a deep dive into understanding what are the assets in which the various categories has been investing and understand why there is a gap in the wealth accumulation patterns of various categories. Based on the Huron India Rich List, the affluent and above category of India has been divided into business owners, stock market kings and golden collar or salaried employees holding top position in the Indian corporate sector. This is a chart for the business owners where you can notice more than 55% of their total wealth has been allocated to their own business. Along with their investment in the stock market, the total wealth of around or more than 70% is allocated in the equities of their own companies or other companies they have invested in. Another remarkable thing to note here is their allocation to car or collection of cars which are depreciating assets are equal to or less than 5% of their total wealth. Also, they have not more than 25% of their total asset in their primary residence. Let's move on to the next category, which is the stock market kings of India. The stock market kings of India, whether they are affluent or above, they have major of their investment in the stock markets. For the affluent, international UHNI and billionaires category, you realize more than 50% of their total wealth is invested in the stock markets. For affluent and UHNI category, you even notice that a small portion of their total wealth has been allocated to a second house, which could be another income earning opportunity for them. Car or collection of cars form only less than 5% of their total portfolio. For the international UHNI and the billionaires, we notice less than or equal to 1/5 of their total wealth has been allocated to their primary residence, which is a non-income producing asset. But for the affluent and UHNI category, you can see a much higher contribution to the primary residence. Next is the golden collar or the salaried employees holding top positions in the corporate sector. Households earning 8-digit salary for last 5 years have been included in this category. Key points note here is they have less than 30% of their total asset allocated to the stock markets. They have a very high percentage of their total wealth allocation to their primary residence, which is around 50% of their total wealth. They also have a second house, which is almost 20-25% of their total portfolio. One good thing they have is they have less than 5% allocation to their car or collection of cars. In the case of middle class or the new middle class, we come to realize that only 31% of their total wealth has been allocated to the stock markets, whereas around 50% has been allocated to a primary house which does not create any income. Also, 1/5 of their total wealth has been allocated to a car, which is a depreciating asset and does not add value to their wealth creation journey. Having gone through the various charts, we realize that more than 20% or 1/5 of the total wealth of the new middle class has been allocated to car. car is a depreciating asset and does not add actually to the value of your total net worth, or rather it decreases the value over a period of time. But in this case of new middle class category, we need to realize they are the new rich coming up, and it is important for them to be validated by others about their success. So they believe that car is the most easiest and tangible asset to own, which helps them to show the world they are successful, which may be in contrary to the belief that not more than 5% of your total net worth or total wealth accumulated should be allocated towards car, because it is a depreciating asset. The new middle class, almost 70% of their total wealth has been allocated towards non-income producing assets. Around 50% has been allocated towards their primary residence. Ideally, your primary residence should not hold more than 25 to 30% of your total wealth accumulated. Early on in your career, where your net worth is much less, you can have a higher allocation towards your primary residence. But around 40-45 years, when you have higher net worth, it should not be over 25 to 30% of your total net worth. But in the case of the new middle class, we can see around 50% of their total wealth allocated towards the primary residence, which is way above the ideal situation. Wealthy households of India has been classified into two categories. One, the lower part, comprising of households having work compensation income along with fixed deposits, real estate and equity investments as their primary source of income. And the upper segment that has inherited wealth, real estate possessions, primary business earnings and a diverse equity investment portfolio as their source of income. Now let's come to the most important question. What differentiates the HNIs from the middle class or the new middle class? I would say it is definitely the ability and the willingness to take risk. Ability to take risk depends upon your net worth. It depends upon your surplus or your wealth in relation to your debt. Whereas the willingness to take risk is the degree to which you are ready to take risk. It depends on your investment experiences, your personality, your financial security and your inclination towards independent thinking and resilience. You need to have both the ability to take risk and the willingness to take risk to make big financial jumps in life. Let's say, for example, there is an youngster who is 20 years old. He may be willing to take risk, but he may not have the ability to take risk. Whereas there may be a 60-year-old man who may have the ability to take risk but not the willingness to take risk. With the previous point, we should understand that middle class prefers a steady job with stable income and few races. Whereas the HNIs are ready to take big risks in life. They start a company which might fail, but they get back on track and eventually start the whole process again. They do not seek for security and stability. They accept failures and look for the next best opportunities in life. Generally, the middle class are more fearful of losses. That is the reason when the stock market crashes, it is the middle class who might take out their money from the market. Also, when the market booms, they are more optimistic and they start investing at the highest levels. Whereas the HNIs or the stock market investors or stock market kings are more logical. They understand the market and they also stick on with the market during the fall, knowing the fact that the markets will eventually pick up. They have understood the market and have done detailed study before they start investing. And since their decisions are based on logic, they are able to stick on with the stocks in spite of a higher fall. Another difference between the HNI and the new middle class or the middle class is they seek validation. The new middle class or middle class seek validation from the society. For them, success is when the society validates their success. This is shown by the allocation of almost 70% of their total wealth towards tangible assets like their primary property and the cars. Whereas HNIs generally do not seek such validation and are confident about their success. Now let's come to a conclusion of what it takes for the middle class to change or to upgrade to HNI. All it takes is a change of your mindset. You need to have a mindset of a HNI to reach their position. HNIs are not fearful to take risk. But being a middle class, you may not want to take huge risk, but at least you can take some calculated risk in life. You may not be in a position to start your own business. Not everybody can be business owners, but definitely you can participate in the equity markets of India. There is a huge potential of growth in the equity markets of India in the coming future. Let's be futuristic and optimistic about this growth story. Learn more about the equity markets of India and invest in quality stocks. Also, let's not depend upon the validation of others. Let's have confidence on our wealth accumulation and let's have more investment towards the income producing assets. Once your dependence on validation comes down, you are in a position to take charge as a HNI.